All right, guys, we got another Monday night video. We've had a 3-day weekend. We've had quite a few lately, which no complaints from me. Last week, we started to have a little bit of those fireworks kind of showcasing not really what 2020 was about, but at least a portion of it. And I call it maybe like 20, 30, 35% of what 2020 was. And so what I mean by that is the potential, the trades that are setting up, the things to be aware of, and stuff like CVNA or BBBY. BBBY should have reminded folks of, I guess maybe BBBY a couple months ago, but those kind of AMC type moves, and then we had something like CVNA where it starts to go. And if you are practicing, typically how you maybe would short in prior ties where every pop is a short and it unwinds, and you add into that position, you found out just how thin these names can be regardless of market cap, right? It doesn't matter if it's a $500 million, $1 billion, or $2 billion, they can still double. And that's something you need to be aware of. And so just make sure the week ahead and as we continue on in this market that you have your guard up. And one of the things that I wanted to talk about from last week, I mentioned it, was, letting my guard down. Now, it wasn't really a big issue. It wasn't anything that really turned into anything, but it's not good practice to let your guard down. So, for example, BBBY obviously is going to be at an A-plus move. We had a huge setup on Thursday, completely unwound. Then it started to, continue to trend higher and hold each support level as it squeezed out to the, into the close anyway. I participated at around $5.10 and just was a starting position, my first entry. However, I started to kind of trade with my bias instead of, hey, I should probably be hands off here because I started in, it held. Went back to it, it held. It started to firm up and it started to go. I should probably be out for flat. I shouldn't even be bothering with it. Now, granted, I only had my starter position on. However, it's still not good practice to let's see what it does and, let it do its thing. What if it didn't stop at whatever it was, maybe 580s, 560s? What if it kept on going to 6 or 7 and so on and so forth? And that's personally where I had run into trouble with stuff like AMC and Clove and all that kind of, crazy, intense, really, I would say, market euphoria that you're not really expecting. And then once you realize it, it just is a little too late. And so that's what I want to be aware of this week, especially if they're targeting these high short float, high short percentage names. What happens is, they go one to the next, one to the next, one to the next. No, it does not make sense from maybe from a company standpoint, from a fundamental standpoint, but it doesn't matter because it's just all an options game and swipe a bunch of options way high, squeeze it out and walk on to, the next one. If you're too early, you're not going to make it through. So that's really the key here, is just not exhausting, letting these things kind of just blow out. Hopefully you can be part of the upside. There was a lot of great opportunities with Bed Bath & Beyond on the front side of the move for the long side. If you're good at that, each level that we talked about started to base and started to consolidate. And then when it broke, higher each time, it was a 50 cent or $1 type of move off that level. So fortunately, Friday came in really, really well. Got a good piece of the meat of the move. And hopefully we continue to have setups like that this week. So just be aware, have your guard up, watch your sizes on the front side of the move. Because like I said, in 2020, before I started to wrap my head around, some of these potentials and what actually could happen in the event that there was a gamma squeeze or something like that, you don't really realize what your risk is until you're actually in the moment and you're kind of way beyond the risk profile that you had set forth for the in trade to begin with. So keep that in mind. And once again, that's where my max stop comes in, right? I don't want to hit my max stop. I want to trade, controlled. I want to trade the right way, and I don't want to exhaust that opportunity. Meaning, if I'm trying too hard, if I'm stepping in front of stuff and I just barely squeak out of the trade after having maybe a poor execution, poor risk management, well, guess what? I'm covering because I got away with it. I'm covering just because I'm happy to be break even. Meanwhile, the big trade's about to come. And now I've taken that away from myself because, I was trying to get cute on the front side and ended up exhausting myself out of the entire trade. Just happy to be even. So whenever I get into a situation like that, you want to think about, are you covering just because you've got back to break even, or should you be adding here? Had you not had everything happen before, would this be a good spot to scale? Is the trade finally, coming and unwinding and proving you correct on the key levels that you were watching before? And so that's all the things that you need to kind of think about in this current market environment. Same thing with CVNA. CVNA was hanging around a little bit too long, and if you overstayed, probably got blown out and comes right back down. We've seen a lot of high-a-day clear-outs. I call them almost like a goalie pool sometimes, where there's a ceiling. Maybe it's a fabricated, a false ceiling, where they just kind of create this ceiling. They're selling, and it attracts shorts, right? They start to use it as a backstop. And then if they pull that, let everybody stop out, and it comes right back to that level, they put the goalie back in, right? Some people call it a high-a-day clear-out. Just, call it whatever you want. The concept is the same, but I don't want to have to forcefully cover. I want to be able to see that without emotion. I want to be able to anticipate that may need to happen before I start into the full size of the position. We saw that happen into the close on NEGG, which I'll go over on the screen a little bit later, but perfect example of if you get too involved too quick, if you get sized up too much, if you're trying to anticipate the reversal too much, then there's a good chance that you get chopped around, and you're not looking at the big picture. If you zoomed out and you didn't have a position, you might be able to see that much more clearly and have a realistic kind of view as to what the potential is, rather than, emotionally charged and emotionally making those decisions on the fly, which a lot of us, do. Video topics for today: Bitcoin move, crazy. This is the area where you want to be cautious on stuff like Mara and Coin and Riot and all these other names. This is a sector move. When a sector move happens, it doesn't matter how much it's, run up, because people are going to be absorbing each level as long as Bitcoin holds. And quite honestly, if you think about Bitcoin right now, and I'm not a bull bear, I don't care. And yeah, maybe I should have bought it 14, 15, 16,000, but, I think that, it's good for everything. Market euphoria. People get excited about that kind of stuff, that, people start to have extra, cash and make decisions based on their coins flying. And that's really what turbocharged the market, in the first place. But you don't want to step in front of a sector move. They can always last longer than you think, right? It unwound further than you probably thought. And now people feel safe again. And when you go back and look at everything that just happened, right? FTX and, the Binance, like all the feud, all the bankruptcies and everything, that's probably the most bearish that the world could have gotten on Bitcoin. Like if you had any doubts in the world, you're out, right? And so that was like the major stop out of everybody that was on the fence. And now if you made it through this, you're probably a lifer. And, I would not underestimate what the potential is. I never underestimated before, but I also wasn't, a bull. But I just understand that, what I don't know. And, what I don't know is how high it can go, how long it will stay. But I do know that it can stay a lot longer than I would anticipate, because it has before, and it will again. So be cautious when you take a Riot trade, a Mara trade, all these kind of things. When you look at Bitcoin, you're like, it just pulled back. zoom out of Bitcoin. Did it really just pull back a lot, or was it just a little, bar on the grand scheme of things, which, you're not going to get a Mara and a Riot unwind unless you're going to get 1,000 or 2,000 pullback on Bitcoin. So just keep that in mind. And again, anything's possible. This could just be one of those market euphoria type moves, and then it just comes right back into 16, or this could be the new, it's going to start to base at 20 and we go back to 30. We'll see. Keep that in mind if you are trading the basket of names, the sector, Riot, Mara, Coin, SOS, this 50 of it. I wanted to talk about NEGG. I will do that on the second portion of the video, and the relation to MEGL. I've told you guys before, where have you seen this before? And it's always good to go back and kind of review how things have happened. And whenever I'm in the room and I'm telling people to record, it doesn't mean you have to trade it. I would actually prefer people just record it, watch it with the commentary that, I give or others give, and then you can go back and rewatch it and say, hey, okay, what could I have done here? What could I have seen? Why did Nate say what he said when this happened? And you start to go back and review it, compare it to another video, and it's going to start to kind of check those boxes, and you're going to have those aha moments. So remember, recording does not mean trade. You could definitely trade it if you're familiar, but it's okay just to record and watch it back. Looking left, talked about this all the time. TCBP was a great example of that. I will also go over that on the second portion of the video just to kind of hit upon that. I think that this was a perfect example of, look at left, daily resistance. And it's not just that it might peak there. To me, it's how high could it go before it finds resistance, right? So whereas you look at a normal trade and you're like, man, this thing's run up too much, it's got to pull back. I look at it and I say, where could this run to? And if I'm going to start into that position, I need to be okay with it at least testing towards that level. If I'm not, then I'm going to probably have some emotionally charged decisions or trades later on if it does go towards those levels. So I always like to think about big picture, where could this go? And put that into the trade plan. And HTGM was another perfect example of, kind of looking left and getting familiar with names that have run, faded, and then come back into resistance. And there's a lot of backfill. There's a lot of people that are probably stuck on the wrong side. So, there's people that always just short the first pop. Then we have that secondary move, and then I start to get interested as it comes into prior resistance, just because people are starting to get bailed out. And once people start to get bailed out, you're going to start to have inventory from them getting out of their positions. 2020 arc we talked about leveling up. I talked to a couple of folks in the room. This is a good time to think about, what are you best at? And we've talked about this before, but leveling up does not just mean I'm going to go double size, triple size, 10x size. It's all about the opportunity. And I think a lot of traders confuse leveling up and sizing up with just trading bigger. And to me, it's when are you going to use the most risk? When is the best shot to use the most risk? And maybe it's like blackjack when you have, 11 and maybe you might be more aggressive at that time than, another time where, you're not showing, a very good hand, right? And so if you were going to always just double it, or if you're always going to size up on these trades, it doesn't make sense to do it with a lesser hand, but it might make sense with a better, an A+ setup. And so that's really what I want to at least challenge you to think about, because there is so much confusion, in my opinion, of this idea of sizing up and that it has to be every single trade. And that's when you're going to get run into trouble. That's when you're going to get chopped up. That's when you're going to have, the emotional strings kind of pulled and tested. And for me, it's just about the A+ type times. BBBY. you've got CBNA, you've got HTGF, these big trades, big volume, let everything kind of come out and then pick up the pieces after. And so that's really the key in this market. I do believe that it's a leveling up style market. It is a great time to be making a ton of money for those that understand volatility. If you don't, if you're not good at this, don't get discouraged. You just had 3 months, 4 months of solid, trading. Now, let the vol guys and ladies trade, and then your market will come back. So again, don't force it if this is not your style of trade. And last but not least, I had a note about thin markets and just understanding that, the markets are and will be a lot thinner than you think, especially on all these names that have super, super high short interest. So be cautious, be aware that, if you are sized up, your risk is not always the same as it was when things start to lift 50 cents or $1 real quick. And you can see that with the candles on CBNA. So for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So my goal here is to kind of showcase what makes sense for a good trade, what makes sense risk reward wise, what's not random, what has a high probability of happening, and what would make me take particular trades. And a lot of these trades, they may happen tomorrow, they may happen later in the week. But the secret is the price alerts. Set price alerts and make sure that they remind you when you should know. That's the idea. You're doing the homework now. So put in those price alerts, put in those levels that interest you today so that later on, when they trigger, you already know, hey, this is what the plan was, this is the level. And on top of that, the price alerts that we had at Investors Underground, you can put a note. So just in case you have a bad memory, when it alerts, you can set it to tell you exactly what you wanted to know from your homework today. So anyway, let's get right into it, and hopefully you have a good rest of your weekend. All right, guys. So for this week, as always, as you know, if you leave a key takeaway, timestamp of whatever it was for an aha moment, something that made sense to you, something that kind of maybe helped you, write it in the comment section in YouTube with the timestamp. And as always, we give away stuff for free, no catch. T-shirts, scans, icon meals, IU, you name it. So this week, like I said, was going to be scans with a Z, STANZ. So Candy Thomas 4880, you have received the scans for this week. And then we've got 2 T-shirts going out, one for ANHTU 6256 and one for BTO 9273. So I appreciate you guys, participating and leaving your key takeaway. Hopefully it helped other folks maybe that were scanning through the comment section and saw it, and were able to go back and kind of rewatch it, or at least have that same takeaway as you. The first thing that I wanted to talk about was NEGG, and we talked about this. I tweeted it ahead of time so you can kind of see it unfold. But this NEGG trade reminded me of MEGL. I always try to challenge you guys to almost remember where you've seen this sort of action happen before. And so, I put it out there and compared it to MEGL, where there was this basically an intraday squeeze setup. So, normally you have this maybe a move that traps and it squeezes out, but then sometimes it creates this secondary squeeze, and it gets maybe a lot of intraday traders on the wrong side, squeezes out before the close, and then completely comes in. And this is exactly what happened here, and exactly what happened on NEGL. And I'm sure we've seen it on, multiple other names recently too, GSUN, just to name a few. So NEGG, there's a couple things that maybe, void a particular unwind, right? So, we talk about how
anytime that there's a breakout move that stuffs that immediately gets soaked, that basically voids out the prior stuff move, right? Usually it might be a stuff move and then the trade unwinds and then that's it. But in this case, we've got situations where there's a stuff move, comes back under VWAP, which is, should look familiar to those that are in the room pre-market when we see this trap happen literally every single morning. But then we've got some exhaustion moves over here. And I mean, I think this is pretty clear that right here is a big exhaustion. And so right there, you can assume like, all right, this is probably going to unwind from this point forward. This is probably a good starting point, which there's no problem with that. However, you need to respect the key levels if it starts to suggest something else. And as you can see, it came right back into that prior key level, and this basically voids the prior move until you have a stuff at 230s. So again, I always talk about proactive covers. I want to be proactively covering into flushes if I am participating in the front side of the move, because you don't know if that stuff move is going to be basically voided by the next test of the key level. So this isn't about just drawing a bunch of lines and just hoping you get one right. This is about a visual reminder to what matters. And in this case, it was also helpful in the case where it was 230s starting the base, and we had this sort of basically this top sort of forming at 240s. Then this 240 level started to base, and we broke through the prior top of the 265s. At that point, all of this move is now voided, and any shorts that are left are on the wrong side of the move, right? So we know that. So we want to be super, super cautious so that you don't take away the potential of a big trade later on before the close. And this is exactly what we saw happen. We saw the basically the ceiling being put in around 290s. And we talk about a goalie pull, or a high a day clear out, some people call it. And the way that I kind of explain this situation is in a goalie pull sense. They pull out the goalie, they let everybody kind of cover, and then they put the goalie back in, right? Goalie being sort of the gatekeeper, the offer, the seller. And if they know, after you see this kind of peak out a few times and it flushes, comes back and it fails again, me personally, I'm starting to get confident that, hey, 290s is just a big seller. However, for me, I don't want to get sizing in. I don't want to get aggressive unless the prior level of support right here, basically 270s, 268, whatever, starts to fail to follow through. Otherwise, I open myself up in the event that they let 290s break. Everybody that was using 290s as a backstop freaks out, covers, and then there's a big liquidity opportunity, right? So that's exactly what happened here. And then we had a nice unwind. We came right back into that key level. We exhausted out, and then nice failed follow through momentum. So that was a really clean move. The goal, the target in my mind, and what I shared at around 290s was I was looking for a $1.80 to $2 pullback into the close, as in going to that level. We got to about 202. So close enough. Didn't quite get the 180 to 2, but a few cents away. Either way, the good thing about this is now we can use these levels come Monday, or in this case, Tuesday morning. 230s, obviously, would be a great breakout move where, I would expect and anticipate a potential exhaustion move. So keep that in mind, and, let's see what happens. But that is the concept. That is what you want to be aware of. And like I said, I always want to kind of remember where I've seen this before. And anybody that's been trading for even a week now should remember MEGL. And if you guys remember MEGL, this was a very similar concept where, you've got this big exhaustion move, comes back, another big exhaustion move, comes back, another exhaustion move. We've got this basically top put in around $2.70. And then guess what? We break through it. And if you throw in another line right at this prior level of, basically resistance, you can see going across, you can see it comes back up, comes back, swipes through. So we've got the same situation as any GG, exhaustion move. You've got the volume, and then we've got the unwind and pretty much, goes straight back down to where it came from. So very, very similar situation. And hopefully you guys were able to take advantage of the action, considering the fact that it was literally the same move that you were prepared for. And then the last two things that I wanted to talk about real quick were TCBP, wild move. How do you make sense of it, right? And so if you just go back and look left on the daily chart, which we talk about all the time, you could see that it peaked out right there. Does that mean that it has to peak out right there? No. However, you can make a general assumption that it should. And if you do start in, you need to obviously be aware of your risk. But for me, it's not necessarily, hey, it should top out here. To me, it could go all the way up to here before it hits resistance, because that's where it had resistance the last time. So if I am starting into, let's say, this move right over here, I need to make sure that I have enough room, buffer, for a move to at least retest and fail at this range. And then I can start to scale in as the trade progresses. So very clean opportunity there. Similar concept to HCGM, where it's coming back and it basically goes right back into prior resistance levels over here, where it was kind of closed here, ran out, closed at this level, and we basically came right back into that resistance point before fading off. And as you guys saw, HCGM, the trade that I posted, I waited for it to exhaust out, confirm my thesis, and then we had a nice unwind. We had a little bit of a gut check. This is almost like a VWAP clear out. So again, sticking with that idea of just things to kind of think about when you're taking a trade, you want to make sure that you have room, swipe risk. You want to make sure that you're not emotionally attached to if it does break over this level. And then as you saw, once they kind of squeezed out the remaining shorts, you can see the volume associated. That was it. And we got the unwind. So let's fly through the rest of the stuff. I don't want to take your entire Monday night, but BBBY, in an ideal world, it gaps up. We have some sort of secondary push and unwinds, but this is going to be a Monday or a Tuesday morning kind of figure it out type situation. Are we going to gap down 30, 40 cents and rally back red to green? Are we going to gap up 20, 30 cents, squeeze another 20 and then fade? We'll see. So I'm not going to take I'm not going to come in with a huge bias. I'm just going to kind of see where we end up on Tuesday morning. fantastic opportunity. This is another one of those where you've got this pretty much peak at 1750s, comes down, and it starts to squeeze back out. So you can kind of see, especially if you participated in this flush, and it starts to put in a ceiling, it starts to reclaim. This is when you get into the squeeze zone. So I like to basically expect that this is all cover. And then as it starts to come back under that key level, which the level that I gave the room was 1730s, as it started to come back under 1730s, I like that for a fade. And then, I ended up covering in the 1650s range. So I'd love to see in the morning 1730s push, 1750s, and then start to fade off. But cautious with a bias. It's crazy off open. It's a China name, so they always have these wild moves right off the open. Sometimes they flush down, sometimes they break out, and it's really like a flip a coin. So I prefer a move like this later in the day or 9:45, 10 a.m. plus. Otherwise, I can't really get heavy conviction unless it's a strong close, a gap up, and some sort of major move off the open to react to. NEGG, same deal. I'd love to see it kind of push back up towards those 230s levels and unwind. Next, we've got SPCE. This is under the failed follow through. You guys know failed follow through. I'm looking for basically higher the better. Ideally, it pushes out and starts to fail to follow through. It's my belief that we had basically a VWAP seller throughout the day. So I would put faith in that. Come Tuesday morning, if it pushes and it fails, I'd use this level as sort of my risk and let it, unwind back. If it starts to firm up again, I would not want to stay there. It had a nice 40, 50 million shares, 45 million shares or so. So it's going to have liquidity. And if we stay in this 2020-ish market where, people are coming back to the memes and all those names, then this could have some longevity. So in an ideal world, gaps up 550, exhaustion, and fails to follow through. TNXP, same kind of situation. I'd love to see it kind of push up towards 140s, 150s, and then fade off. Put price alerts. You're probably gonna lose this one off radar. Love to see it push, fail to follow through, and join that trend. See what happens with that. CVNA, higher the better. Very nice trader on Friday. Great entries. We had this consolidation pattern, which as it holds, looking left to Thursday support, you don't want to fight it. So I went ahead and covered, and because I covered, I was able to react into this action and had a good piece of the trade the rest of the day, as you likely saw if you follow me on Twitter. GOTU, ideally, we have some sort of daily chart sort of squeeze out. And so basically what I'd be looking for is maybe like a 4 to 420, some sort of breakout over these prior highs. People think it's going to peak there, trap them, squeeze them out, and then I start to come in would be ideal. So I'd love to see a 4 kind of clear out and then start to look for the fade back down. HOLO has been a nice one. I'd love to see this continue to go. It feels like, there's a lot of shorts that maybe got a little too aggressive. We had a fantastic opportunity for those that have been monitoring it. There was a lot of wash volume. You can see all this is fake volume. And then they get people excited. It's stuffed. I participated in this flush. And then it came down $3 per share on literally no volume, right? So that is not a confirmation of a liquidation trade. It's definitely potential, and it likely does have a liquidation in the future. However, you had about 30 minutes or so to see that we weren't staying heavy. And, to me, that's sort of the sign. We've talked about this multiple times, but you want to see heavy volume selling. Right now, I think they're still into, trying to trap shorts and trying to create this appearance that it's super, super liquid, right? You come to the market, you've got 700,000 shares traded, which is fictitious, in my opinion. And then you size based on the fact that you see 1 million shares on the tape, when in reality, it's probably only trading 50,000 shares by itself. So people get outsized, they take on too much, and they end up in a bad spot. So you want to be super cautious with that. Continuation side of things, I've got Riot, Mara, we'll see with these. We've got SOS. Really, I'm just sort of in brainstorm mode for any Bitcoin type names. And then last but not least, I have BIOR on watch. I just feel like it was too easy of maybe a trade for the backside. This has been a nice big picture unwind that I've been looking for. But I think that they raise, and I'd love to see them put out some sort of PR, consolidate, squeeze it out, and then do the PR in the coming days. The raise in the coming days. So we'll see what happens, but pretty standard, pretty clean unwind since that short trade. You guys saw how I navigated this day. I was pretty happy with it. So steady sell since. I do think that there's it's very crowded with longs. Just because there was a lot of patents that day. There was 2 patents on the big breakout day, which caused shorts to cover, longs to get excited, and then they still ended up, unwinding it anyway. So I think there's a lot of people on the wrong side of the trade on this one. But I think that shorts are starting to get super confident. And what has me attracted to the potential of maybe a PR rebound day is the volume, right? So we had back-to-back 55 million share days down to 2.6 million. So if we start to hold, we have a liquidity trap on our hands where a PR could fuel it. Then we could have the raise in the coming days after that squeeze out is completed. So anyway, that is it. That's what I've got prepared for the week ahead. And again, it's going to be day by day. Be patient. If the trade's not working, take it off. It's not a market to really be, letting things not work in your favor. They should be working for you right away. otherwise, you can have better use of your funds and your in your time. So I think that's it, guys, and we'll catch you in the room.